Hello everyone, and welcome to the last episode of Office Hours with yours truly in participation with The Loft, the last episode for 2022. We'll be back next year, obviously. No interviews today. It's me again for like 3-4 minutes. And we're going to do a quick recap of 2022. And I'm going to give you some thoughts on 2023 and what to expect. So 22 ended up being quite a pivotal year. We had a tech meltdown in the publicly traded markets, especially with SaaS equities that percolated all the way to private equity and venture capital, late stage startups, early stage startups. That's number one. Number two, that meant that valuations for startups, old and new, kind of got hurt. We had lower valuations for startups that had a tough time raising capital, and there are many startups that probably are not going to survive this pivot. Number three, no more growth at all costs. Everyone is back to the basics, back to building something, back to getting to cash flow positive as much as possible and conserving capital. Number four, many investors have left. You still have investors in specific verticals or like generalists, but a lot of hobbyists have been hurt, and you've had a retrenching of capital being deployed, even though there's still a lot of dry powder, right? Five, I think that you all have noticed that there was a crypto meltdown, lots of Ponzi schemes and manipulations, and on top of that, an alleged criminal activity within FTX Alameda. Before that, we had 3 Arrows, we had Celsius, lots of implosions, and prices of crypto assets and cryptocurrencies were sharply down. That means contraction in that particular sector, a lot of people hurting, and all of that caps a year 2022 that is quite momentous. So what to expect in 23? Well, in the crypto/digital asset space, we will have more regulation in the EU and in the US. MiCA is coming. MiCA has been approved. There are other pieces of regulation that's going to come in line. Same in the US. I expect a tightening for protecting consumers, for protecting investors, a tightening of exchange activities, of market making activities, of broker dealer activities, of issuance of assets, and all that will be very, very positive because there's still a lot of activity happening from a innovation perspective on various layer ones and layer twos in the entire crypto space. So crypto asset prices may not recover as fast, but I think that innovation will be still healthy, and capital will, fly to quality innovation projects that make much more sense and have risk management, regulation, and compliance in mind. The traditional part of the Fintech industry, more embedded finance. So it's more embedded payments, more embedded insurance, more embedded lending, and so on and so forth, for vertical SaaS businesses, for SMEs, and the likes. And I also expect a fair bit of activity with fintech startups in the capital markets and the asset management space, where data analytics, smart automation, machine learning will be applied to various processes that used to be done manually and won't be done manually anymore. All in all, valuations will be not as high and nosebleedy high as before. Rounds may be smaller in size, and teams, whether they're purely in crypto or whether they're purely in traditional fintech, will be gauged and judged much more on their reasoning, on their common sense, on how they deploy capital and innovate in a more prudent way than we have seen over the past 5 years, and culminating with 2022. So plenty of activity, most assuredly. With that, I wish you a wonderful Christmas and Happy New Year, and I will see you in the new year. Bye for now.